Hi everyone, I've got some great questions from an investment student of mine. I thought I would share my answers with you. So he's emailed me, I'm going to read from the email. How do you deal with mistakes selling a stock too early or too late? I'm assuming over the years you've developed a mental model and thick skin. Well, in a way, there isn't a mistake of selling too early or too late because we have a very simple rule with investments. As you'll know, the 12, 25, 15 rule, which is 12-month holding period, unless it drops more than 25% from the highest it's been since I've bought it, in which case I exit. Now, you might say, well, it's a mistake then because it went on. It dropped 25% then went on. Well, it's not a mistake because it dropped 25% and I kept a rule which I'll hold on to them regardless of how much they drop. Then the ones which went on to rise do not make up in our research for the ones which continue to fall. So that wasn't a mistake. And then the issue may be, well, you held on too late. You should have got rid of it before it dropped 25%. Well, that can happen. But the problem is the ones which drop to say 24% and then go back up make up for the ones which we should have got out of earlier. So as it is, it's a balance because we don't have a perfect crystal ball. So in one sense, there is no mistake. However, let's say I get out of something and I think, you know what, I know I've got to stick to the rules and get out of it, but I wish I didn't. What I sometimes do is on the CFDs, because a lot of my positions are held by CFDs, not just actual stocks. Obviously, all my stocks are held to the maximum allowable amount in my SIP and ISA, but after that I've got more capital to deploy, so I've got to use a general trading account, which means I often use a CFD account. Now in those I might just buy the minimum allowed just to keep an eye on something, because it then shows up on my screen. So I'm being a bit lazy. It shows up on my portfolio screen and I can instantly see whether it's in red or green. And if it goes into green and I've already sold it, and I might have bought, I don't know, £1 worth, or let's say for argument's sake, but I'm just monitoring it. Then I think to myself, oh, that was interesting how that went. Oh, right, let's see. But then again, that's not to do with the investment side. Then that's just me trading, which is something completely different. And I do have investments and I have trades, and they're two independent things, although they might end up being interconnected because I might trade some of the positions that I own. But let's not confuse things. Let's just stick to investing for now, because if I confuse it with the trading part, everyone's going to get confused. Which broker do you actually use for CFDs? Actually, I like using virtually every single broker, whether it's because I like to compare. So Interactive Brokers, IG, Saxo Bank, all of these. Okay, and many more, as long as they're FCA regulated. I have funds available but need more guidance here. Please advise steps moving forward. Currently, I have just bought the underlying stock, but this year I want to move forward. Well, if you want to use CFD, then it's leverage. And if you're using leverage, you've got to look at the warning signs. Now, in the Great Investments Program, I have something called Strategy 8, which people will know I will, on that, use 2 times leverage for certain stocks which are skewed very much to the right-hand side of the distribution curve. In other words, positively skewed. Now, these might be a Microsoft and only 2 times leverage using CFDs. That's called Strategy 8. Have a look at that on the Great Investments Program. That's still held for a 12-month period. And I expect a positive return. Now, in the short term, the volatilities are such that you could be down 10, 20, 30, 40%, even on a Microsoft, which is why I don't hold it for the short term and only do 2 times leverage and not more. In the long term, it tends to be positively skewed. I get the returns and therefore do 2 times leverage and only in a narrow selection of stocks. The mistake most people make is they go short term. They don't listen to what I'm saying. They go short term and they pick other stocks. Right? If you want to do that, I'm not the person to speak to. Go speak to, Gamblers Anonymous for that one. When it comes to trading those individual stocks, there isn't a simple way of communicating that. I might look at a screen, go in and out of a trade, which let's say I've got a position in Microsoft and let's say I'm trading some of those positions in and out. There isn't a simple way of communicating that. Don't say to me, oh, can you just tag us along, whatever might happen, because it's not done for people to copy, because I might be experimenting certain things or new theories that my team have put together or theories that I've come up with at night. I thought, we test that. So I can't possibly communicate that anyway with the public. So the trading stuff is just almost more just because I enjoy it and it's a bit of fun. It's not the professional side of things. It's not the to be shared side of things. So that's completely separate in any event. So the main thing I'd say for the public, as it were, is warnings on leverage, and have a look at Strategy 8 in the Great Investments Program. I did the transfer to free trade. Yeah, free trade's good for holding stocks because it seems to be relatively cheap. What was the main reason for transferring HL whole leverage? So what was my main reason? I like to try every single broker that's out there. That's my reason. I haven't transferred everything from Hargreaves. I'm just saying I like to have something with a lot of different brokers just so I can compare. Remember all those books I've written over my shoulder? That was because I just love looking at this area. When do you eventually sell your various leveraged products? Will you post on Telegram? I will. I can't believe I didn't buy 3 times S&P, but hindsight is a wonderful thing. If I got £1 for every time somebody looks at my Telegram channel and then goes, oh my God, I can't believe I didn't do that. Why didn't I do that? Why didn't I do that? When will I sell them? I'll post it on there. It's usually, remember the types of things which I'm so risk averse. They're the types of things like the S&P, which I hold for a very long period of time. They're not meant to be traded in and out on the whole, the types that I have in leverage. To put things into perspective, it would be good to know, since you started GIP, what's your biggest winners and losers. I've mentioned already, the worst was Hertz, okay? And on the UK side was Hive, right? And the best has been the S&P 500 triple leverage. Well, it's triple leverage, so it would be. On non-leveraged, guess what? It's been the ones I keep banging on about for the last 10 years, sadly. It's been, well, actually, I guess best of the best was right up there until I got rid of it. But Apple's and Amazon's, yeah, it's not rocket science. Square suddenly is coming up. PayPal continues to do well as well. Now you might say, well, what about Fisco? What about the SPACs that you've got like Virgin Galactic? Well, that's separate. That's not great investments program. That is my IPO, SPAC and FOMO trades. IPO, SPAC and FOMO. They're outside of the general program. They're the higher risk, more experimental stuff. Will it work? Won't it? Don't know. Don't know if the IPO strategy will work, which is recent IPOs like Bumble. We'll have to see. So they're not meant for public consumption. They're just, hey, look out of interest. This is what's going on. The real test moving forward now, I can imagine most people made great returns from last year and in previous years, but the program didn't exist in previous years, but those who have been following me for the last 20 years have always made pretty much, other than 2008, I would like to think, rather good returns. Do you ever intentionally diversify over value growth, dividend, speculative stocks? Presumably the stocks outside the GIP are not included in your team. They're not included in my team, you're right. Do I intentionally... I don't know what that question means. Over your years of experience, have you ever seen such volatility? Yeah, I was around in 1987. I bought my first stock when I was 12 years old from £100 borrowed from my aunt back in 1984. So yeah, I've seen such volatility. And if you want to know whether I've seen it or not, just Google a map of the FTSE 100 and the Dow since then, and you'll see 1987, 1999, 2001, 2008. I remember you said, for the purposes of this course, you hold more than the recommended stocks, 15 to 20. Prior to this, is that what you did? Yeah, prior to the program. So because of the program, I don't want people to think, oh, he only bought these. Now he doesn't. He talks about the others, but he hasn't bought them during the course of the year. I've, because of the program, bought more than I would suggest if I wasn't showcasing people things. So I want people to know I eat my own cooking. But prior to that, I would only have had 15 roughly for in my portfolio. Everyone always says this is not financial advice, speak to an advisor. I remember I did many years ago St. James's, but never followed through. Currently, I need an objective view and some guidance. Any suggestions? Yeah, be your own financial advisor. You've got enough education now. You'll probably know more if you've gone through my program than any financial advisor will. In my experience, the material in my program is more knowledge than any financial advisor. There's no financial advisor I've ever met who knows more than what I've mentioned in those in the programs. It's another way of saying I know more than financial advisors, which I think you'd expect I would know more than they do on finance and so on. So who would I recommend? None of them. Well, unless you want somebody to tell you, hey, go into a whole load of funds that they get kickbacks on and are completely over diversified and will underperform the market. But if that's what you want, then that's great. That's different to a pension advisor, that's specialist, or a tax advisor. You should speak to a pension advisor and a tax advisor. That's different. Should you take your final salary pension? I can't advise you on that. Can't advise you on your tax situation. You've got to speak to a specialist. But on terms of selecting your own portfolio, I say do it yourself. You know, when they say do your own research, what they mean is what I'm teaching you to do your own research. I show you what to do. Nobody ever says they do say speak to an advisor, but that's just because they're trying to absolve themselves of responsibility. What they should be saying is please educate yourself so that you can be your own advisor. Who is in your team or what roles do they play? I'm assuming Telegram posts are you. Not always. Sometimes my team posts it. Sometimes I post it. Are you planning it? You know, just like President Trump. Sometimes he posts it. Sometimes I post it. Are you planning Discord platform? I'm not, but I don't know. I don't know. I've seen a lot of people do it, and I think as long as I'm giving people value and they're already getting it through Telegram, why would I want to sort of then distract them with lots of other things? Regarding current members mixing with like-minded people, can you any scope for this move? Yeah. So what I want my students to have is I want to try and do a dinner or some kind of reception, some kind of thing at probably Beaverbrook in London, because I live in London and lockdown means I can't do it everywhere. Might look to do one in Leeds if there's enough numbers in the north. That way people don't have to travel down. But those are the things. Going back to the team and what roles they play, whether that's relevant. So we've got Judy, Francisco, Paresh, Vanessa, Nan and Ajay on the asset management side. We used to have Kanira, not more. And then we've got our compliance team as well. Richard, Susan. Do you really need to know the organo chart? I don't think it's relevant. That's all. Thank you very much.